Okay, good morning, everybody. Thank you
There's
for
one.
the Mortgage Monday call. It is June 10th, 2024. My name is John Mooney. I'm originating area sales manager here at Guaranteed Rate Affinity. My co-pilot is Mr. Aaron Wise,
Good
also
morning.
at Guaranteed Rate Affinity. Good morning to you. Quick recap, every second and fourth Monday of the month, we have this Mortgage Monday call. It is a quick fire, quick hit, 20-ish minute call to talk about what's happening in the world of mortgage lending to help you and your clients win in today's market and have the most empowering financial information on hand to serve your clients and help people purchase homes, right? So Aaron, you want to introduce yourself before we get rolling with today's agenda?
Yeah. Aaron Wise. I've been with Guaranteed Rate Affinity for going on 5-6 years, working through Lincoln Park, Gold Coast, and everywhere in between. And yeah, we're excited to keep these calls going. I think we're at number 9, maybe 10, something like that. So yeah, and it's a little tricky out there right now. So I'm looking forward to chatting here a little bit. So.
Yeah, so the idea here, guys, is we're going to give you our combined 40 plus years of experience in this business. Okay. Feel free to throw questions into the chat. Feel free to throw mortgage scenarios at us that you may be dealing with. Even if we don't get that particular client's business, we're happy to coach you through the process. Getting rolling with market conditions. So the week of June 10th here, we saw a couple inflation reports over the last couple of weeks that inflation is still sticky. It is close to the Fed's 2% target, but it is not yet there. We are starting to see inflation cool down a smidge, but it's not at the level the Fed is looking for. We continue to see home prices continue to rise. We're probably 5.5% up year over year in terms of home prices. They revised the first quarter's GDP down a tick or two, okay? And then that jobs report that we were waiting for on Friday exceeded expectations in terms of new jobs created. This is the football that Lucy keeps pulling away from Charlie Brown, okay, in the market these days, guys. So, Aaron, do you have anyone floating into that report on Friday that we saw?
My advice was lock if you got them. I think that we'll talk about the float here in a little bit on the agenda, but right now this is a scenario of if you're a buyer and you decide to wait and lock something, there's more downside than there is upside. So yeah, I advised a couple of people to lock them down, and I'm happy that we guessed correctly. As much as we like to say we know exactly what's going to happen, I think hedging against things getting worse right now is the play, right? So yeah, I think we're going to live and die by these reports for the next at least 3 or 4 months. I don't know, not to get too in the weeds on this, but I don't think the Fed's going to do anything until all of these reports that we're watching on a weekly basis start trending in the right direction consistently. We've just seen this sort of up and down wave. You know, we had a nice break a couple weeks ago, right? And then we just kind of got punched a little bit on Friday. So it's kind of like for like a sports analogy, it's kind of like watching your favorite, football team or basketball team. There's ups and downs throughout the game. There's runs where we're doing well, and there's runs where we're getting their teeth kicked in. So we just got to kind of ride the wave, grab what we can when we're positive, and hope for the best. So
Agree. And leading up to Friday, we had 4 nice days in a row as far as interest rate activity, right? So there's a discrepancy in the jobs data. There's folks out there that think because the numbers continue to be revised for the worse as far as new jobs created, when those reports hit on Friday, my recommendation, and same thing, like my clients were protected. We locked them Thursday afternoon. and we have a float down policy, right? So let's touch on that. So particularly when it comes to these unemployment reports, they come out the first Friday of every month. The Fed has two main jobs: mitigate inflation, maximize employment. Until we see the job hires, the new jobs created softening, the Fed is going to keep rates higher. Okay. And there's a lot of anticipation that goes into those Friday reports. But, we recommend, don't float into those reports. Lock it up the day before, especially if you're comfortable with the monthly payment. And we can float down if rates improve prior to closing. Okay. So rates went up probably between 1/8 and 1/4% just on Friday alone. They're not running away from us today, but they're not coming down yet today either. So our free float down policy allows someone to lock, and then we can float the rate down if the market gets better, as long as we're within 30 days of closing. Okay. So essentially, if you're working with us at Guaranteed Rate, your client gets 2 bites at the apple as far as when to target that interest rate lock. If it's a 75-day close or something like that, then maybe you float into one of these reports. Okay, you have a lot of time to recover there. But if you're 45 days or less, I would say we should look defensive to lock initially and look for the float down the road. Any input or success stories you have on the float down recently, Aaron?
My only comment on that is I think 80% of contracts that are coming in right now are 21 days, 25 days. Anything that's 45 it feels like a new construction or a relo or something like that. So, that window is shorter and shorter. So my only comment on that would just be, I think you can have confidence that your buyer is going to get whatever the best deal is at that point in time, right? I think none of us have really figured out how to buy the perfect house at the perfect rate at the perfect time. So all you can do is, it's a little cliche, but just all you can do is the best you can do in the time frame that you're allotted. So, the way I explain it, and I like this one-liner, is when you go under contract and we have that first conversation, what are the odds that the rates are the best that they're going to be for the next 30 days on that one day? Probably not that great, right? So the advice is to always lock it with what we've got, make sure we hedge and we don't get worse. And then let's keep our eyes peeled, see what happens. And hopefully we get a nice float down in the next, 3 weeks before closing. So.
Yeah. And just to underscore that, if your client's working with a big box retail bank, or even a smaller credit union or smaller independent mortgage company, those float downs are typically not available. Okay. So, with us at Guaranteed Rate, because of our size and our volume, the investors allow us that opportunity to put the client in a better position. Okay. So a value that we offer our clients free of cost, something that makes a big impact in today's market. Okay. Other items just to touch on: inventory is climbing. Okay. Home price growth is still growing, but it's not growing at the pace that it was. Demand is also slightly falling. Okay. So home prices eased to about 5.1% year-over-year growth in April. Mortgage demand remains about 45% off in comparable periods in 2018 and 2019. Okay, so we will send a recap out with links to these statistics if you guys want to go ahead and read through. If you have questions along the way, don't hesitate to reach out to us. We love talking about this kind of stuff, and it helps you offer your clients empowerment financially to make wise financial decisions. And it's a big deal right now. Okay. The other thing I want to touch on is the first-time home buyer market. Okay. About 33 to 35% of transactions right now on the buy side are with first-time home buyers. Okay. I've been doing this 20 years. Aaron's about the same. There has never been more first-time affordability products out there for first-time home buyers than we are seeing right now. Okay. Aaron, I'll put you on the spot. What's your favorite first-time home buyer program right now?
Um, I keep chatting about the $8,000 grant. We locked up a couple more of those over the last week. Um, super, super simple. If somebody's a first timer and they live in a certain census tract, that's it. We give them a conventional loan. 5 grand comes from Fannie Mae, 1% comes from us. So 1% of whatever their loan amount is, up to an additional $3,000. So that's going to total out and cap at 8,000 total. And the cool thing about that program too is there's no income caps on it. So you can make $1 million and still qualify for that program. And the other thing is the interest rates are better on it. So it's one of those things. And I say this to every buyer that qualifies. It sounds too good to be true. And they're just going to have to take a little bit of a leap of faith with me on it. But walking away with 8 grand and a better interest rate than anybody else is a pretty damn good program. So that's my number one.
Yeah, it's if you can land that one, it does have the most flexibility, the most bang for your buck. And I just want to highlight it's actually based on where the buyer currently lives, not where they're purchasing. Okay, so it's a little bit unique in that way. But to Aaron's point, the rates are below market rates, up to $8,000 in down payment assistance and closing cost assistance. No repayment or prorated amount on it either. So it's different than the IDA product that comes from the state of Illinois. That one is restrictive in terms of income limits. If someone uses the purchase today and they want to sell next year or refinance next year, they're going to have to pay a prorated amount of that grant back. Okay. Our program doesn't work that way. Jane, I saw the question here in the chat. So it's not based on zip code. It's based on the specific census tract where the customer currently lives. Okay, so if you have buyers, it is super easy for us to look up their current address and identify if they're eligible for this program. Shoot us a note, text, something in the chat. If you want us to talk to any of your clients, we're happy to do so, or we're happy to just look up the address and say yes or no in terms of eligibility. Okay. What's another first timer that you have out there, Aaron? Another hot program you're using these days?
Just right along with this program, I think what I was thinking about is while we were talking about it, one other key bullet point on why this matters. If I'm a buyer's agent out there right now, the buyers that are getting these grants are way more apt to not be as affected by home inspection items too, or buy an item that's going to cost them $200, $500. I mean, if your buyer's getting $8,000 from us, they can use that to buy a rate down. So they're going to get not only are they getting a better interest rate to start, but they can use the money to buy it down further. Or, if they've got to put new floors into place and it's as is, or, we see the furnace is on its last leg and they're thinking, man, this could be a $5,000 to $7,000 expense later on, but they're not going to get a credit for it. It can help get over that hump. So, not only is it great for us just to be able to say, hey, you're going to get this, this money from us, but the stickiness of those transactions seem to be a lot different, where the fallout is a lot less. I'm noticing, whereas, if a buyer is going all in and it's a lot of their cash, they've been through 4 or 5 bidding wars and lost every one. They won one, they're having some buyer remorse. Then they're hearing that, rates are a little bit higher. They're not getting any assistance from anywhere. It kind of stacks up to a degree, I'm just noticing. So anyway, that's not even specific to a program, but I just feel like we all want to win, right? We all want the W. So I feel like they get the win through if we can get them a grant or just something, right? So to answer your question, one of the other ones that I like is when they are buying in a certain area, It's not giving them grant money, but it's giving them a better interest rate, or they can use that to get a lender credit back from us. Okay, so I had one on Friday. Actually, I was texting with you, John, on this one. But that first grant that we mentioned is a situation where the money is based off of where they live. The second grant that I'm talking about now is where are they going to be purchasing at? So the difference was with this gal's scenario, she would have been locking at about a 7.3%. So she could have got that 7.3 and walked away with about 3,500 bucks. Or she can just say, I don't need the 3,500 as much. I'd like the lower rate. And on Friday pricing, she was at about a 6.8, 6.9. And this had nothing to do with anything other than the fact that the property fell in that certain area. So again, no income caps. She could make $1 million a year. She's not a first-time home buyer, owned a couple other homes. She's actually buying a condo in a building where she already owns another condo because she relocated and is moving back. So long story short, again, there's a lot of incentive there. So I think she's going to be, knock on wood, less apt to pull out of that deal if we have some kind of goofy inspection item because of where it's located at. She's getting the win. So long answer, but that's the honest one.
Yeah. No, it's great. If we can land this program, there's literally nothing else like it in the marketplace.
Yeah.
Okay. A couple other things that we always like to talk about: how to leverage your lender to win competitive bids. So we have a power bid approval program. I jokingly say it takes the off your pre-approval. It is a bona fide commitment letter. It works as good as proof of funds. We use this to complete with cash offers. Okay. We can close it in as little as 7 days, which is the shortest time the compliance allows. But usually about 10 days, 2 weeks are what we're seeing on the norm there. If you have a customer that knows they're entering a competitive situation, this front loads the entire process. It's free of cost. So get us involved early using that power bid pre-approval to help your clients win those situations. Okay. We talked about it before: increase in earnest money, the comfort level of waiving, certain types of contingencies, finance contingency. We've done all the homework on these power bid pre-approvals. So waiving that finance contingency, customers should have good comfort doing that. We've already approved everything. It's been through underwriting. Okay. Gaps on appraisals, things of that nature. We have a tool that we can run the property address before they go under contract, and we can tell you with extremely high likelihood if we're going to be, able to waive that appraisal entirely. Okay. If it's a situation they have 20% down, chances are realistic we'd be able to waive that appraisal entirely. That gives that empowerment to your customer to potentially talk about appraisal gaps or waiving appraisal contingencies. Okay. So get us involved on those as well. Last but not least, and we'll talk about this more perhaps on the next call, we have a cash buy program as well. Okay. So say, for example, your customer is a contingent sale, but knows that they're not going to win an offer with that home sale contingency. We have a program where we pre-approve them up front, and they basically purchase the home with cash from our lending partner. And then we have up to 70 days to sell the home that they're currently in. And then they basically purchase the home from this particular cash buy investor. Okay. So if you have those situations where it has to be a contingent sale in terms of qualifying, in terms of customers' ability to debt ratio, as well as getting the down payment money from the sale, we have a new tool that we can put into work for you and your clients. So feel free to reach out to us. Last but not least, two things that we continue to talk about here: help stop credit report trigger leads. You may have heard from your clients when they go under contract and there's a hard pull done on their credit report, that all of a sudden they're getting calls from these chop shop online lenders from halfway across the country Some of my clients have told me that they're getting upwards of 10 contacts a day, both by text message and phone number. In my recap, there'll be a link. There's a petition to stop that, okay? These customers do not share their personal information with these lenders. We, as Guaranteed Rate, don't share their personal information, but when there's a credit pull, the credit bureaus can share that information, and it results in a lot of spam. Nobody likes it. Hopefully Congress will stop that at some point if we make enough noise about it. The other thing is institutional investors, okay? So hedge funds, things of that nature. In certain markets, they're making up 20-25% of all purchases right now. They purchase single-family homes for the purpose of long-term rentals. It's hurting our inventory situation. There's a petition to stop that as well and require institutional investors to sell their portfolios over the next 10 years and no longer be able to step in and purchase property, out from under those first-time home buyer clients that we all work with every day. Okay, so there will be a link in the recap as well. Last but not least, we're coming up on 22 minutes on the call here. So Aaron, anything else you want to touch on, highlight on today's call before we start wrapping up?
I'm just going to give a shameless plug here on Wednesday of this week, so 48 hours from now. I'm going to be a guest bartender, if you can believe it, for a event that we're co-hosting for the Chicago Coalition for the homeless. And so if you show up and grab a drink, any tips that you give will contribute to our fundraising. So if you want any more detail on that, definitely let me know. But should be a good time. It's in the Avondale neighborhood. And yeah, supporting a good cause. Chicago Coalition for the Homeless does a really good job. And it's kind of one of those things where when you donate to somebody, you don't really know where the money's going a lot of times. But with this coalition, they're literally in the city of Chicago, boots on the ground, actually trying to help. So that's why I try to support those guys as much as possible. So if you have a hankering for a cocktail on Wednesday, or if you're a non-drinker, they do have a lot of good NA options as well. Give me a shout, and it'd be good to see you. It's from 7 to 10, so you can pop in anytime. So
somehow I picture you being quite at home as a bartender, Aaron.
I will try. I will try my best.
Yes.
Thank you.
Another question in the chat here. What are rates today? So rates are right around 7 or the low 7s on good credit, 20% down, a vanilla situation. We can get into the 6s if it's in one of those targeted areas or in one of those programs that we mentioned before. So just a quick answer to the question there. And again, when we do our pre-approval consultations, it's a soft pull on credit. It's never too early to have a conversation with us in terms of your buyers out there, even if they're not planning to purchase until the fall or next year. Those soft pulls have zero effect on credit. They're not shared with any third parties, so the spam calls don't come into play either. So it's never too early to get us involved. Feel free to reach out if you have questions or you want to introduce us to one of your clients. On behalf of Aaron Wise, this is John Mooney signing off Mortgage Monday, June 10th, 2024. Thank you for attending the call. We will get the recap out here shortly, as well as a recap of the video. Share it with your agents, with your neighbors, with your clients. Free value for everyone. Thanks again for your time today. Have a great week, everybody. See you in 2 weeks. Have a great one.